Buffett hasn't made an investment like the one he just announced in 6 years. One of the most serious criticisms leveled at legendary investor Warren Buffett in recent years has been that he has been sitting on the sidelines and not investing while stocks have soared. There have been even rumors that Buffett has been washed up. Buffett even admitted to himself last month in his most recent annual letter that he failed investors by failing to find any attractive investments in 2021. Buffett's fortune at Berkshire Hathaway grew to nearly $150 billion because the greatest investor of all time simply couldn't find anything worth buying. Buffett put nearly $20 billion into two separate investments in a matter of weeks, though. In this video, we'll talk about these two massive investments and see how they stack up against Buffett's famous investing checklist. Keep watching until the end because Buffett's investing checklist is something you can start using in your own investing right away. But first, please like this video because a lot of work goes into these videos and it greatly benefits the channel. Also, subscribe to the channel as well. Let's get started with the video. Allegheny is the first of Buffett's investments that I'd like to discuss. Y is the ticker symbol. That's their ticker symbol, just the letter Y. Allheghany is the ultimate Buffett investment. The company has kept a low profile over the years, hosting no quarterly earnings calls and receiving little Wall Street analyst coverage. Allegheny is an insurance company that primarily operates in the property and casualty insurance industry. Property and casual insurers, or PNCs for short, are companies that offer insurance on assets such as houses, cars, and other items, as well as liability insurance for accidents, injuries, and damage to other people or their belongings. Allegheny's largest business segment, accounting for more than half of its revenue, is reinsurance. Without going into much detail, reinsurance is simply insurance policies that one insurance company can sell to another. To put it simply, reinsurance is insurance for insurance companies. In addition to insurance, Allegheny owned non-insurance businesses such as steel fabricator, a trailer manufacturer, and even a hotel management firm. Allegheny can then be thought of as a miniature Berkshire Hathaway. It, like Berkshire, has its core insurance operations, but it also owns a variety of other businesses and investments. Allegheny's insurance operations would complement Berkshire's larger insurance portfolio, which includes Geico for auto insurance and General RE, a unit that insures against major catastrophes and unusual risks. Buffett offered $11.6 billion to buy Allegheny, making this the company's first significant acquisition in 6 years. In fact, this transaction would rank among the top 5 largest acquisitions in Berkshire Hathaway's history. Just a quick aside that will go down as a typical Warren Buffett move. The price that Berkshire is offering to buy the company works out to $848.2 per share. This is an unusual number because most deal prices do not reach fractions of a dollar. The reasoning behind the one-of-a-kind per share deal price, on the other hand, is classic. Buffett's initial offer was $850 per share, but he reduced it by nearly $2 per share to account for the $27 million in investment banking fees Allegheny paid Goldman Sachs. Investment bankers provide advice on deals and are compensated handsomely for that advice, which is not always the best. Buffett dislikes investment bankers and regards them as, quote, high-priced parasites, so he refused to cover the additional cost, which was instead deducted from the deal price. Warren Buffett is classic, and some things never change, even at 91 years old. Now, let's look at Warren Buffett's second recent large investment. Buffett's second major investment was in Occidental Petroleum, which has a ticker symbol of OXY, and is an energy company. The company is in the oil and gas exploration and production business. It operates in 3 sections. The oil and gas industry discovers, develops, and produces oil and natural gas. The chemical industry produces and sells basic chemicals. The midstream and marketing segment buys, sells, transports, and stores oil, natural gas, and power. Occidental Petroleum's stock price has struggled in recent years, though. In May of 2018, the stock price was trading north of $85 per share, then it fell until it reached a low of around $10 per share in October 2020. However, since the beginning of the year, the stock has performed exceptionally well, and it's currently the best performing stock in the S&P 500. Buffett could have nearly a 24% stake in the company based on the shares he has acquired and the warrants he owns. For those who aren't familiar, a warrant gives an investor the right, but not the obligation, to purchase a stock at a specific price. As an example, as part of Buffett's $10 billion investment in the company in 2019, he received warrants that gave him the option to purchase nearly 84 million shares at $59.92 per share. Assume the stock is trading at $100 per share when Buffett decided to exercise his warrants. That means that Despite the stock's current price of $100 per share, Buffett can buy it for just $59.92. You can see why Buffett would find this extremely valuable and advantageous. To be a great investor, you must always be learning and improving on your own knowledge. This applies to both new investors and investors who invest professionally as a career. Studying great investors and understanding why they make the investments they do is one of the best ways to learn about investing. So for the remainder of this video, I'd like to compare these two investments to two core pillars of Buffett's investment strategy. 1. The circle of competence, and 2. Margin of safety. Before we move forward, please like this video and subscribe to our channel for more content like this. One of the most important lessons Warren Buffett can teach us as investors is the concept of the circle of competence. This concept is incredibly simple but extremely powerful. Consider a circle. This circle represents businesses that you're familiar with and can assign a value to based on your knowledge and experience. Any company that falls within the circle is one you can invest in at the right price. Anything outside of your area of expertise is a business that you don't understand and probably shouldn't invest in. This is how you limit your investment mistakes. You only invest in companies and stocks that are within your area of expertise. When it comes to investing, Buffett believes there are only two rules. The first rule is to never lose money. Rule number 2 is to remember rule number 1. Buffett has frequently stated that his biggest investment mistakes have occurred when he has strayed too far beyond his circle of competence. Let's now examine how this concept relates to Buffett's investments in Allegheny and Occidental Petroleum. Allegheny is in the insurance business. Buffett stated in the press release announcing the deal that he has been following and studying Allegheny for 60 years. Talk about in-depth and comprehensive investment research. Based on Buffett's experience with insurance companies, there's probably no other investor on the planet who understands insurance companies better than Buffett. Even before he became CEO of Berkshire Hathaway, he was investing in insurance companies. Buffett began investing in the auto insurance company that he now completely owns in 1951, when he was just a 20-year-old college student. In 1970, he purchased his first full-service insurance company, National Indemnity. Buffett has also run his own insurance company, Berkshire Hathaway, for over 50 years, and the company is now one of the largest insurance companies in the world. You don't necessarily need decades of experience in an industry for it to be within your circle of competence. What you need, though, is a thorough understanding and knowledge of that specific area. Buffett's experience investing in oil and gas is not nearly as long as his experience investing in insurance. But this isn't Buffett's first investment in the oil and gas industry. Buffett currently owns Chevron in his Berkshire stock portfolio and previously invested billions of dollars in the Chinese oil company PetroChina over a decade ago. Next up is the concept of margin of safety, which is an important concept for Warren Buffett's investment strategy. Keep Buffett's two rules in mind. When investing, a margin of safety can help you avoid losing money. Buying a dollar for 70 cents is the definition of a margin of safety. Assume you have a stock in which you want to invest in. Based on your research, you believe the stock is worth $100 per share. However, the stock is currently trading at $70. The difference between what the stock is truly worth, $100, and what it's currently selling for, $70, represents your margin of safety when investing. Allegheny Insurance is valued using a metric known as the price-to-book ratio. Price-to-book is calculated by dividing a company's stock price by its book value per share. Simply put, a company's book value is what would be left over if it sold everything it owns and used the proceeds to pay off all of its debts. The remaining funds would be its book value. So if a stock was trading at $10 per share and its book value per share was $5, the price-to-book ratio would be 2. Buffett's offer to buy Allegheny values the company at 1.26 times its book value. For comparison, this is significantly lower than Berkshire Hathaway's price-to-book of around 1.6. This deal is thus valued lower than other insurance companies with a price-to-book ratio of 1.26. Markel, which is essentially a larger version of Allegheny, currently trades at a price-to-book ratio of 1.5, while Chubb trades at a price-to-book ratio of more than 2. Remember that Allegheny is unique among mid-sized insurance companies in that it also owns non-insurance businesses, as mentioned earlier. Last year, the non-insurance businesses alone generated $175 million in after-tax profits. The non-insurance businesses are valued at around $3 billion. If this is the case, Buffett is paying around a 1.1 price to book Allegheny's insurance side. Allegheny's insurance operations are of high quality, and Buffett is paying 1.1 times book value to acquire the company. Given that similar insurance operations trade for a price to book in the 1.5 to 2 range, one would argue that this investment has a significant margin of safety. The break-even oil price is an important metric to understand when evaluating oil and gas companies. This is the price of oil at which the company would make a profit. If the price of oil falls below that level, the company will begin to lose money. If oil prices are higher than the break-even point, the company will be profitable. The current break-even price for Occidental is less than $40 per barrel. This means that if oil prices rise above $40 per barrel, the company will become profitable. The more money the company can make, the better. Oil prices have recently surpassed $100 per barrel. The difference between the price of oil and the break-even price of Occidental is one way to assess the investment's margin of safety. Buffett buying more shares of Occidental is basically him saying that he doesn't know what will happen with oil prices, but he believes they will remain well above the break-even price for Occidental. If oil prices remain above $100 per barrel, Occidental will be printing money. I hope you find this video useful. Please like it and subscribe to our channel if you did. Thank you for watching, and I'll talk to you soon.